Latest commentary that's coming in from the Federal Reserve Chairman, that is Jerome Powell, talking about how the central bank cannot wait until inflation reaches that 2% target to start cutting rates. He said that, they have resurfaced the area of long and variable lags to actually explain why the Fed will not now be waiting for the target to be hit. He also said that it's going to be a hard landing for the US economy, which is not a likely scenario. So clearly, policy easing perhaps sooner than expected.
In fact, Nikunj, also the dollar index on this commentary, the way it came off, bond yields have come out, have US markets almost factored in that there's a sooner than later kind of a rate cut scenario?
See, I'll make one simple point, that markets are no longer governed by Fed. Fed is not like this, emperor's throne, which in a sense will decide which way financial markets would move. So whatever Fed will do, it will have implications in terms of bond market, it will have implications in terms of how the economy would move, their view on the economy. But in terms of really having an impact, that whatever Fed is going to say is going to be absolute truism and markets need to follow that, I think that case really seems to be getting diluted. Now let's look at what Fed is saying. Fed is saying that for the first time, they're sounding constructive and they're not sounding dim about their outlook on inflation. Growth was not a problem for US economy. It was always inflation. Luckily for them, the inflation bugbear seems to be coming under control just ahead of the US election. So that's one good thing for the Fed, and that's one good thing for the US economy. Ahead of election, inflation seems to be coming down. B, if inflation comes down, rate cut will happen. Fed for the longest time has said that, look, we will maintain our long-term target for inflation is in and around 2%. But now they're saying that we will not wait for inflation to come down to 2%, but we will move on the rate cut, which clearly means that rate cut will come sooner than later. Are markets really factoring in a couple of rate cuts in the next 6 to 12 months? The answer to that is yes. So there is nothing new in terms of an intent. The new communication is that they will not wait for inflation to come down to 2%, because if they wait, that means they would be doing dollar tightening. Why is the dollar index strengthening? Well, if the Fed is sounding constructive, it obviously means that US economy will do well. Now it's a catch-22 situation for emerging markets. One side, US economy is strengthening and US markets are at an all-time high. B, if interest rates they peak out, flow should come back into emerging markets. So depending on whom you are asking, you will get a different answer. I continue to maintain that while we may look at India on an absolute basis and feel very happy, but the real relative word is global equities. Sensex Nifty nearing 25,000, but before that happens, Dow was already sitting at 40,000.
That's correct. And even the Trump trade was prevalent yesterday. If you look at the contributors in US market, clearly there was some amount of development there. A lot of arms and ammunition stocks, private prison operators, all of them, clean energy and potential reversal of climate policies. This was the composition of action there. In fact, there's development there. Mr. Trump has also chosen V.D. Vance as his the vice president's selection candidate as well. But what about Indian market? Yesterday, 25,600 is where we are at now.
See, what did we see yesterday? Apart from the fact that, FIs, they continue to support the market, you do have a big change in terms of the market pattern. The broader market did yesterday very well, unlike Friday, where the broader market has not done very well. One. Second, you are seeing what could be called as the pre-budget mood in the market. So you've got banks, you've got construction, you've got typical policy related stocks which are moving back in the fifth gear. And the differentiating factor now is that IT has stopped falling, and IT in a sense is no longer the bugbear for the market. So one really looks at the contour of the market. Here's how I look at the market. The direction is strong. The momentum is not exciting. The markets are not showing any signs that they want to reverse, but rather than chasing stocks, either you should wait for a big decline before you buy them, or if you own stocks, don't be in a hurry to sell, because there is no way mathematically we can prove that this is the threshold beyond which markets are not likely to go higher. This is earnings season. You will see a two-way movement. But considering where we stand right now, I think in the near term, the bias is more bullish than bearish, but the bias to commit fresh capital, I think, is not there. So I'm not contradicting myself. All I'm simply saying is that don't be in a hurry to sell, don't be in a hurry to buy. sometimes doing nothing also is a strategy, and I think doing nothing is a great strategy in this market.
Okay, so I guess just sit tight. That's the advice in terms of dealing with the markets today. But yes, you did have a pretty strong record close coming in on Wall Street. You did have a nice, healthy close for our own markets just yesterday. And in terms of the Asian screen, a little bit mixed after the kind of commentary that's come from Fed Chair Jerome Powell. But the other big talking point is quarterly numbers, and Bajaj Auto will be coming out with their numbers. And while the street is penciling in that there could be a fillip this time around to the margins, that profits could come in higher on a standalone basis by about 15.8% and 1928 crores. The domestic and export volumes could grow on a year-on-year basis, and there's going to be better net pricing. The margin mix as well is all going to aid, and there is going to be a lot of focus on the outlook on the CNG bike, the e-mobility initiatives. Remember, we've been talking to the management about that, as well as what the demand outlook, Nikunj, is going to be for Bajaj Auto.
See, it's not a market moving number, but it's an exciting number to look forward to. First from auto, first from two-wheeler, first from a time when the stock has done reasonably well. First in terms of where you should expect where the market would take a leap of faith from what really could be the consumption side of the market. Up until now, where have we got numbers from? We only got numbers technically from IT, nothing beyond that. And DMart. DMart is an indicator of retail mood. Bajaj Auto would be an indicator of the discretionary spend. So I think in that context, Bajaj Auto numbers are strong, and I must honestly confess that I never expected this kind of a rally in Bajaj Auto. But the fact that monthly dispatch numbers are picking up, rural economy showing signs of traction, you could be in for a exciting commentary more than anything else. So it's a interesting number to watch. It's been in performing stock, the first from the auto, which in a sense would be an indicator of how things would move. I don't think you'll hear anything on CNG bike bookings and on e-mobility initiatives. Those are not the market moving numbers for the quarter gone by. For the quarter gone by, what really matters is their future outlook on demand, future outlook on margins. Demand in terms of rural revival, margins in terms of where the commodity inflation has moved.
What a sharp mover in the last few days. In fact, running up into that CNG bike launch also, the stock has added quite a lot of weight. But
if you like this video, then like, share and subscribe to ET Now.